Hey guys, Neil here. Welcome back to the number one trading tube. And yeah, here's another edition of the play of the week. Let's jump right into the chart so I can show you guys what I saw and what we took as a profitable trade and why I deemed this as an A++ setup. I'm in trading view here, and I'm just gonna jump to the H1 quickly, so hourly, so we can look at this. All right, so everybody that knows me, we had this equal lows here that we were targeting to run to reject, and then obviously run those buy side. We did not get that. We did get that we smashed right through those equal lows and that liquidity, but instead of rejecting it, we actually went aggressively through it and started to consolidate. Now, that to me is an indication that we obviously want to go lower. And what I've done here is my mind just shifted to say, all right, if we want to go lower, what do I want to see? Where do I want to sell? And where do I think we will change our minds again? Now we know this is the liquidity here. And within that liquidity run, we've left this or created this big fair value gap right here. So I'm going to take that liquidity out quick. Anybody that knows me would know that this to me is great liquidity pools in fair value gaps. And for me to turn bullish again, I want to see price aggressively inverse this fair value gap to then targeting new highs and all of that. But for as long as we stay below this or with inside it and not break the top side to close above it, then I'm just going to look for sell side. And if I want to sell this thing, where would I want to sell it? If for every instrument you want to buy or sell, if you want to buy something, you got to buy at a discount. And when you sell, you got to sell at premium. Just that on its own gives you enough reason to take a trade confidently and to become profitable. Not every swing high and swing low. Some swing highs and swing lows get broken because it's liquidity. But if you got a liquidity that was run that creates a push and you wait for price to come back to a premium, you can sell confidently there and you'll be consistently profitable over time. So what I've done here is I then marked out the highs and the lows, and my equilibrium formed right underneath that. So that was good enough for me for price to go up and look, up into above that line and into this fair value gap to give me some sort of reason or reversal to short. Then I would have taken that short all the way down. All right. So if we then jump into a 5 minute, let's see what happened here. This was the previous, that was the latest low that was formed during that's equilibrium, and then you get this big consolidation where we formed a low and consolidating. Now we're waiting to see what price does. In this instance, I thought price was going to rally up somewhere here in London or into New York, and then I would look for sells to these low. If we move forward with the free play or the replay mode, you'll see we actually tapped that low just after London. And then we created this big rejection candle. Now, here's another example of a fair value gap that gets inversed. That on its own is an entry. If I didn't take this one, but that would have given you enough reason to buy, because you run this, we want to get to a place where we want to look for shorts, and we've got some equal lows already. I mean, if you look at this here, there's equal lows, equal highs right there, and you could have targeted that on its own. This is not going to give you a good risk reward. This will most probably be a 1-to-1. But anyways, so I'm going to leave that equilibrium there. We've run liquidity, and let's see what happens. Market aggressively runs away, and this is where people start, falling into the FOMO and trying to buy, and we just sit tight. What we've got here now, we've broken all this liquidity. Now my attention moves to this fair value gap right here. I've got context now to look for any retracement back in here to go if we haven't touched that equilibrium yet. And we then created an interesting scenario. And it's always good to look for liquidity pools that gives you the highest probability. All right, my time frame, or my time when I'm going to take a trade, I'm looking for trades at 10 o'clock, and I look for trades between 10 and 9:30, right there. Now I've got even more context, because now what we're doing, we're creating an equal low scenario area. Remember, we still want to go there, but now we've got liquidity here, and we just ran liquidity down here, creating a fair value gap. And if we go through the whole process again, all the way up there, I need to look for a discount area where I can basically buy to go to that, if we're not going there first. All right, so now we've got equilibrium right here. We've got equal highs right there. We've run liquidity, and there's a fair value gap. Now this is becoming a very A+ setup, because if price comes down and give me any sort of reversal in here, I will look to buy and target those equal highs, knowing that we could go all the way there. All right, let's see what happens. Obviously, I know what happens. It's not like trying to fool everybody here, but this was a live trade taken in my live groups. And if you follow me, you'll see this is what we do. Now we trade. All right, now we've getting to this area here. I'm going to jump to a 1 minute, because I like to trade off multiple screens where I look at 1 minute and 5 minutes. Alrighty, let's give it another few candles. Right, now people might ask me, okay Neil, so you went in there, why did you not take the trade? Okay, well, there's some equal lows, relatively equal lows. We ran it. There was another black. It didn't give me enough. There's no fair value gap, and there's a fair value gap there, and we didn't really close above it to take a buy. But then we get a form a swing low within my time frame, where I start looking for setups, and in that I get an aggressive push below them, and there's my fair value gap. Will be very eager to take a trade now that we're below this and within this space, and let's see what happens. So what we did, we spiked right into it. Okay, so we're not there yet, and there's a very specific setup I'm looking for here, and I will put a breakdown of my strategy in separate videos for you guys to have a look at it. Alright, so price look like it wants to go up and not down yet, and then we come make another aggressive move, and this is where people think, oh, we're missing out. Just be patient when you take these trades. We create another low here. Alright, let's see what it does. And now we there's a fair value gap here, and you'll see it's all about fair value gaps for me. So we've rejected that, so we didn't close above it, so we're not there yet. Okay, now we testing the 50% of this to the tick. Now I want to see something that's rejecting from here away from it, to go through it and then go higher. So what I want you to notice here, we've got this equal highs, But then we've got all this higher highs or lower highs that also create liquidity, like a trend line. People will sell off there, sell off there, sell off there. And that is another good, liquidity pool to target. Then we get another rejection. What I want to see, even with the previous candle, we took this low out. We rejected at 50%. If we closed above that black candle with a white candle, I would have looked for a buy. If we then close, I will buy again to permit into my setup, and then obviously run for those liquidity. But the next candle was still going down, but it's still holding that 50%, which is obviously key for us. And then we've got, sorry, I missed that now. So we got that white candle breaking these bodies and close above there. That was an entry on its own. Then we created another candle into the next fair value gap. So now you've got to be careful here. Will we, reject this to go lower, or at this point in time, I'm very happy to sit with my trade, and if it goes back down, that's fine. I'll take a loss, but I'm already in profit for the very next candle. We then got this break above. People might say, geez, I don't want to buy there. Okay, well, then you do this. You look at this break of structure right here. Now you've got the swing that created this liquidity rate, and then this aggressive push away through that fair value gap that was inversed. Now you can expect something to come and retest the zone to buy. So you can take a buy here. Yeah, everybody still thinks we're short, and now a candle might aggressively at first go short to trap more short sellers into the market for the setup, like that, and then reject. Okay, so people might say, no, it's still holding that trend line, so don't worry about it. I'm saying, guys, we're ready to go up. We've shifted away. These are all places where you can start adding more longs to your trades. And I just play this along. Let's just put this actually in. So that would have been your first entry, just below there, and you would target these equal highs. That's a 5-to-1 on its own. Then for everybody else who likes to be more conservative, you would have taken that the low here. That's the low below the fair value gap. That's another 4.8 risk to reward. And again, this is in replay mode. It was a live trade, and if you follow me on my live groups, you'll see we actually took this trade. So you're not going to go full in both, because you don't know what's going to happen at this point in time. This is where I would take majority of my trade, and then I will add into at this point in time. But also remember, we still got this equilibrium where we want to see price to go to for those shorts. And this is where we start running it. We in the 10 a.m. when market opens, and we start running all that liquidity quite aggressively. And let's see if there's anything else here. There's most likely a silver bullet, which is at 10 a.m. We know we want to go to this equal lows, and I think people might see this as the silver bullet holding that 50% there, and that's just after the break in structure where you could have taken some more longs. And then you see your and and if you've taken that as a silver bullet, you most probably would have get stopped out right there. But then you get this nice rejection here. Now we see this, let me take this off so I can explain this better. you'll see this push down, up, down, up, down. That's your 3 draft pattern. There's new liquidity over here. The minute we close above this down candle's high with a white candle after that rejection, that will deemed as you know, some buy again, and there you can take another buy, another long. This most probably will not give you the best risk reward, most probably a 1-to-1, but you could have go higher to go to the equilibrium we've been targeting. But I mean, there's so many opportunities actually in this trade that it's absolutely worth it. You don't have to get, obviously if you get a daily bias right and all of that, wait for that big trade, you can do that. But there's nothing wrong taking these you know, these trades for your internal liquidity on equal highs, and it gives you the right context anyways to take the trade. There you see us breaking through that, but again, we break through it aggressively, like what we showed you guys on the H1. So I'm expecting price to obviously go to equilibrium right there, and there's some obviously structure breaks here, so it might come down and test these things to go higher, like it does right there. And there's a little, let's take it out, little, I don't know if that's a order block or didn't as an order block, but anyways, that's the structure, that's your swing low, and like I said, we want to buy and discount, so that would have been below the 50%, that would have been discount, and let's see how it actually played out. Okay, so obviously you would have get stopped out there, but that's the way it is. Our trade was from down here, and there you go, another 1, 2, 3. So what I wanted to show you guys, obviously my trade of the play of the week is not to go to equilibrium. My play of the week was the equal highs right here. And what I wanted to show is that if you're very patient to start building a case to see, all right, we ran a low, we rejected it, and we moved higher, we printed actual equal highs, and it came down back into a discount zone, and in a fair value gap, a lot of things added up. The entry was there, and it gave us everything that we needed. I mean, there was the structure break, the fair value inverse, the retest of it, and all this liquidity. That is what we've gone through. And I think if you play this thing through, I can't remember if this thing went all the way down here, but eventually it came above this and then drop further for the week. So yeah, that's what I've got for you guys on the play of the week. Don't forget to subscribe and join you know, obviously my channel. I will add you to a group. Just pop me a message if you want to be. I'm not trading fully live yet. I'll do it from time to time, but I'm soon, you know, as I grow my subscriber base, and you know, to start trading these things live on YouTube at no cost. And yeah, give me a shout. Let me know what you thought about you know, my play of the week. If you've got any questions, if you've got any suggestions or anything you want me to look at for you guys, and maybe post it on here. It works everywhere. And yeah, have a great week. Don't overtrade, and watch out for me, or look out for my Outlook video that will come out shortly. It's a brief overview on a higher time frame, what I'm seeing and what I'm expecting, and let's see how it turns out this week. And I'm sure there will be some great opportunities again for us to trade. Take care and be safe.